Okay.
You've done all the coughing.
All the coughing.
All the warming up is done.
Mic is hooked up properly this time.
You're ready to go?
I am. Are you ready to go?
We're going to call this a trial run just in case.
Yeah, okay. Let's
just in case.
Just in case.
So the week was good on Wall Street, I think. Still, things are going well. But let's start it off. I'm Cody. This is Wall Street Breakdown's podcast of our weekly market review. You are
Anthony from Wall Street Breakdown.
And how was your week?
It was excellent. Excellent week. Busy week. Obviously prepping for the podcast and following the weekly news takes up quite a bit of time. So.
You got to know what you're doing.
Oh, of course you do.
You can't be sitting here purporting like you know what you're talking about and be a dither an idiot, man. I'm expecting you to bring some heat with you.
Of course.
Right?
Of course, yeah. How was your week?
It was good. It was a good week, yeah. I mean, finally we're getting a bit of weather that's conducive to a positive attitude.
Yes,
you want to get outside and you want to actually do something. I like that. We're sitting here in our summer Wall Street Breakdown studios in the palatial estate overlooking my front yard and an apple tree where we'll maybe make some comments on the yokels walking by down the street as we do the podcast here. But otherwise, yeah, good stuff. I haven't obtained the wealth I'm looking for yet, but the health is definitely there. Things look to be going well into the summer. I'm enjoying your company, the company of others. I can't complain about this week or any other week.
Very good.
For that matter. So, you want to get into it?
Yeah. Let's just jump into it. Enough of me talking anyways, Cody. So, how did the markets close this week? Should we run for the hills or what?
Well, I mean, if you listen to all the talking heads, I think you've been running for the hills for a couple of months now.
Oh, yeah, definitely. Yeah.
It was so good in January that since then it's been tough to find... It's been tough to find continuous optimism. You find optimism. There are people out there that still have optimistic sentiment. There's still optimism around certain sectors and where we're going in the economy globally and locally, especially when we talk locally, of course, we're talking about the United States.
Yeah.
But to find it as an overall anymore since January, since the highs of all the highs, right? And since things have been like the most sparkling diamond that you could ever see. Then since then everyone wants things to be bad, but the markets were pretty even. It was up, it was down. It wasn't anything atrocious. It was up for the week. The Dow closes 24,462. They're below the 50-day moving average or touched below the 50-day moving average throughout the week. The S&P 500 2670, again below the 50-day. Nasdaq 7,146 below the 50-day moving average. Again, TSX 15,484. What we come back to is below the 50-day moving average is now going to set off probably a bit of selling. Just in the general technical sense of things. There's no fundamentals, I think, that change at all. We were at a very, very high top. It sets your averages a little bit high. Obviously, then when you take in averages of lump sum time, like the 50-day or maybe the 200-day coming up here in the near future, you're going to see, I think, a couple of these indexes, they're going to end up crossing that number. They're just going to do that because we've set such high highs. And, you know, like you skew the numbers when you jump up astronomically and hit a peak, and then you come back down and find some sort of a plateau. As that average starts to weigh itself out and you get more days of the plateau and the peak represents itself as kind of a standalone period of time, you are going to get a skewed number that's going to look like it is below that 50-day moving average. But right now, to look at that and say, like, I'm shocked, I'm not. It hit high in January. It's been coming down, not steadily. It's just been trying to find a base. It doesn't do any weeks where it's down and then it's down again. We're not having repeated downs, but we're having down days. We're having as many down days as up days, it almost looks like at this point, which is not the norm from last year.
Right.
But that's not historical norms.
That's not a norm either. No.
So yeah, that's not a norm. That's the anomaly. We did a fantastic job. The market's doing a fantastic job. Things are fine. Little technical analysis below the 50-day moving average for a bunch of our the main indexes that we're going to follow. But it's not the end of the world. Don't let people tell you it is. We go back to the same thing that we've been saying now for months here on this podcast. It's that when you're looking for winners now, you have to actually pick winners.
Yeah.
Things aren't all going to run in accordance with each other because the market's running. You now have things that are near tops. Things are still growing, but you're going to have to actually do your work, and
do your research now.
Pick a winner. It might be a lot more difficult. You may have to dig into sectors and learn about some stuff that is, way off base for you. Something that's not as easy as just picking an auto manufacturer and a big tech company.
Right.
You may have to do a little more digging, but the money's out there because you then look into the earnings, and the earnings are all astronomical beats, EPS beats, rev beats, and some of the rev beats aren't crazy, but the rev numbers year over year still, when you compare to last year where numbers were crazy, the rev beats continue to beat by double digits almost every earnings call that we see. I mean, we only take, what do we do for earnings calls? The top 100 of the S&P 500 roughly?
I would say that, yeah.
Right, we take a couple of little albatross companies that we happen to like occasionally and take a look at what things are doing. Or if a company's been making a lot of news recently and then their earnings comes out, their earnings tends to fall into our basket of earnings too. But for the most part, we're looking at companies that are turning over billions in rev every quarter. But when you look at these numbers are astronomically good. Like, like, I don't care, corporate tax cuts, this, that, the other thing. It's just, things are really good right now. The market got toppy. Pick the winners. Now you have to pick the winners. You can't just glide in and pick anybody that's riding sidecar, because sectors are all running. It's not going to be as prevalent over time with entire sectors running as it's going to be with you picking the right individual companies in the right sectors. And those, I assure you, are still out there and still priced to be purchased easily. It's just a matter of the work.
Right. The work has to be done.
Now the work really has to be done. Everybody can tout fundamentals when markets go up 20% a year. But when markets start to average what we're going to get this year, which is probably going to be a single-digit increase at the end of the year, you're still going to find plenty of companies that are 15%, 20% gainers, but they're going to be a lot more standalone. Right. You're not going to see their contemporaries all beside them with those same gains, unless you find some maybe underpriced sectors that go on runs. And that might happen, because I've seen some underpriced sectors out there where I'm starting to see reasons why the whole sector might move. But that's a matter of me doing a little bit of deeper digging than maybe everybody else is doing. Yeah. I'm going to keep that a little closer to the breast. But it's out there. The money's out there. Just more work's included in it.
Yeah, definitely.
You always got to do more work.
Oh, you definitely. Well, you did say it's not the end of the world, so I'm guessing the economy did pretty good this week. Should I hold on for one more day?
Well, I'm not done. So markets, gold,
sorry, my bad.
1,334 an ounce. Oil up 68.40. It's like we're out of that range now. Like, I know we were talking that range, and it's 2 weeks and it's up again. I was good 58 to 65, and when it was sitting 63, around 63 for a while, I was good. Now, I mean, you're looking at a different range that I'm not. We've got OPEC, guys out of Saudi Arabia. Like, OPEC's a cartel. They control so much around the world. And Trump came out on Friday with a tweet. He just changes agenda. You notice how he just, like, deals with a topic? Like, says, like, there's going to be these tariffs on China. Here's these tariffs. Now, China, you deal with this, and we'll deal with this as it comes. He moves right over to Russia. Here's going to be these deals with Russia. Here you go, deal with this. Now I'm going to move over to North Korea and work this nuclear plan on top of that. I'm going to just send out a tweet saying, like, hey, the prices at the pump look a little high as far as I'm concerned. I wonder if that doesn't have something to do with OPEC choking off the supply on their end, right? And you have OPEC coming out and officials inside of OPEC saying, I mean, they're looking to see oil around $90 or $100 a barrel. Now, when you're looking and you also control the output and the amount of supply that hits the open market, because Trump in the tweet insinuated that there's ship barges out at sea, sitting at port full of oil, just not being mainlanded to be distributed, because there's got to be these choke points so that there's, I don't know, dissension. There needs to be some sort of dissension for some reason. So when you get Trump on the case, because like this is like Inspector Gadget, right?
That's right,
He jumps around from thing to thing and just like deals with stuff. So now that he's got OPEC in his sights, if that furthers into next week, for me to start guessing oil prices now my hands are up in the air.
It can go anyway almost.
Price at the pump, barrel price, I don't know, like Do you stir up this hornet's nest too? He doesn't seem to have a problem doing that.
No, he doesn't.
He struck Syria. Russia was going to attack. Did Russia attack anything?
No.
They said again, like, if you attack now again.
Yeah.
Right? It's like one of those guys.
We're going to do something.
One of those guys that says, like, if you do this, or if you do it again.
Yeah.
So, I don't know. Trump doesn't get his Trump card pulled very often.
No.
To start going after OPEC and tweets on, the tweets are a big deal.
Oh, yeah.
His tweets aren't just no tweet, right?
No,
it is a strategically placed tweet that's meant to insinuate or aggravate conversation about a topic that he feels is not being represented to the fullest, or at least his agenda. And in this case, it would be the American people's agenda, because the price at the pump affects people. I know we're concerned about inflation, but I mean, like, I don't think they want inflation to be going up directly because you're paying that much more a gallon for gas.
That's right, yeah.
They want it to be going up on a much more even level. Bitcoin, $8,892. That was this afternoon, a little earlier this afternoon. That's 2 weeks of gains in a row.
It is, but
from being down considerably. Morgan Stanley actually came out with an analyst's estimate, I guess you would call it, saying that they assume it's going to cost a break-even point, with Bitcoin having to be at about an $8,600 threshold for miners to even be able to make money.
Really?
For the cost of equipment and hardware and how much it costs to keep up. And that's even if they're getting it at that 3 cents a kilowatt hour that we see like a couple of places only having. Like I think Washington State, there's a little city we've talked about this once, that's got like a municipally held hydro dam that they've built that a lot of companies, miners move to, like mid-range sized guys that have moved to this small town because they can get hydro from this dam for very, very cheap. So this company is actually the people that own this dam, which is, it's either the municipality or the county, have said like they're going to charge X number of $1 million per line they have to run, because these guys can just up and leave at any point in time. So they're running power to these giant, basically facilities that are mining for cryptocurrency at this 3 cents a kilowatt hour. And that's the cheapest I've seen when I've seen it quoted out there in the Bitcoining world of miners, right? So when you talk Morgan Stanley saying it's going to take 8,600 as a threshold, we're sitting around where it's not even feasible right now. If that
not really,
no. Like you're not even making any money. So the price might be jumping because they need it to. They're just forcing it to jump. People that need it to, that are so hedged into the process of this going forward, need it to, that there might be capital coming in from people who actually took their capital out to begin with, just trying to bump the market as an entirety thing. But I still don't see an implementation.
No,
so
me either.
When I look at it as an investment, it's not, but it's really interesting again to watch the price move, and then to hear these numbers that Morgan Stanley comes out with. You wonder when you might start seeing a real downturn in the amount of miners that there are.
It might be pretty quick.
It might be right? It might be pretty quick. The 10-year Treasury, that got a lot of news this week as people are starting to obviously move their money over into debt. It reached 2.96%. That's the highest since 2014. So do you want your money making 2.96%? When I say that there is stuff out there you could be invested in, that you could still make double digits on, if you do your homework and you have the proper ability to just forecast, you have to look at things properly. But if you hedge smart and you go out there and you're not aggressive, but you're diligent about how you're investing, and you're not kind of loose with things and buying things because they make the news or because you like them, but because they're the right. Do you want this 2.96% really interest you? Sure, it's safe. It doesn't really interest you.
No,
There's a small amount of money that can save. If you're sitting in cash, if you're sitting in too much cash and you don't know where to put it,
I guess
that's
you can put
fine.
It
That's ahead of inflation, right? Yeah. Like, it's all right, but come on, like,
put it in bonds.
For that to make news, right? We keep talking about the bond market. Like, I realize the bond market's creeping because the actual stock market's at a top.
That's right.
So the inflows to the bond market are going to obviously start to go up a little bit, as there's a lot of people that have just too much cash and nowhere to put it, and it's better than nowhere. But
that's right.
The idea of it being like your investment protocol, like let's jump to the 10-year, is ridiculous.
Yes,
so the 10-year 296, highest since 2014. Big whoop-de-doo. Call me when it pays something tangible, like something that's at least going to be a gain where I can see it over time.
No,
because everything else, when you look at it, I still see longevity in the actual capital markets that market seems like worst case scenario stuff almost.
Almost,
I mean, it
yeah.
almost basically is, right? As opposed to
true.
just small amounts of diversification.
So that wraps up the markets. Now we're done.
Now I'm done.
Now
you don't tell me when I'm done the markets. I tell you when I'm done the markets. And unfortunately, the markets tell me when I'm done because they come out with the news. I don't dictate none of this. I just
you just deliver it.
I just announce it. Yeah, that's all. I don't shoot the messenger, my friend.
Exactly.
Why must you cut me off in the middle of this? Now we can move on to the economy.
Okay, well, now let's just jump right into the economy. Are we headed for Armageddon or not?
Up in Canada, inflation is going up. 2.3% in March. That's the highest since October of 2014. Inflation without any of the volatile stuff. So core CPI, only up 2%. And of course, high fuel prices are bringing that inflation number up artificially a little bit. So when we take it out and look at CPI 2.3 in March from 2.2 in February, but the core CPI removing that inflation, 2%, right, I think, around where the Bank of Canada wants it. Bank of Canada met this week, and they left the benchmark interest rate alone, unchanged at 1.25%. They're paying attention. They've mentioned all the stuff they're paying attention to. They said there's a lot of inflows to Canada economically that aren't there, that would be there if there wasn't the tax cuts in the United States. Yeah. But because the United States has allowed all these corporate tax cuts, there's some money that would have came up north otherwise that has found itself down south. Also, there's some real estate market problems they're still looking into. Obviously, the inflation number isn't a concern of theirs, but something they're always keeping an eye on. I don't think people were expecting the Bank of Canada to meet this time and raise the rates anyways, so they stay unchanged, 1.25%. Stephen Palaz, he knows what he's doing. I like the Minister at the Bank of Canada, smart guy, very concise.
He knows what he's doing, yeah.
When he talks, you understand exactly what they're talking about. It's not a whole bunch of convoluted stuff.
No, yeah.
Right to the point. Canadian retail sales plus 0.4% in February versus a 0.3% estimate. So apparently we're still spending money out there. Inflation's going up. We're still spending the money as well. We've also spoken about Canada's debt ratio to their income. That's got to be a concern. And we've seen in some of the earnings already, an earnings call we're going to come up with later. It's probably more American than Canadian, but still delinquencies on some credit is starting to creep up a little bit as well. So Canadians need to be aware of all this stuff, that interest rates will continue to go up, that inflation is going up, that the price at the pump, because of who knows of all the different moving pieces in that, could continue to go up through the summer. This might be the best time to pump the brakes on a couple of expenditures that you maybe don't need to be making and adjust quicker than the average person, because the adjustment may need to happen, because I can assure you that while Canada is still doing well, our economy is nowhere near on the pace that the United States economy is. So let's not get the lines blurred and start assuming because you hear American news that we're all the same thing, because we're not. Up here, we're spinning our tires. We're trying to get it right. The oil field, we reported last week, 3 straight years of down. They lost, $36 billion in 3 years. First year of up, they only made $1.5 billion across the industry up here in Canada. That's nothing. That's nothing, right? Let's just remember that, Canadians. So inflation going up, interest rates are going to go up. Retail sales keep going up, and that's good, but we know that the debt ratio is going up. So Canada, don't compare yourself to America in that way. Our economies are not near as stable. I'm not saying that we're not on the right track. I think Canada is a strong country, right? Like, I think we're doing the right things, but I definitely think we have much larger hills to climb. Not insurmountable hurdles, but things that are a lot more pressing. And we're a country that can get dictated to much more than a country like the U.S. that does the dictating to.
That's very true.
Right?
Yeah.
So we don't have that luxury as well. Speaking of just NAFTA, we're still on pace. We're going to get this done, I think, by the beginning of May. Everybody's positive, but nobody's coming out with any specifics.
Right, okay.
Everybody keeps meeting. The tone is that we're moving things down the road. It's probably just a lot of... there's just a lot of, everybody's got a little power struggle at the end and
Right.
wants that extra little bit to say they won something, to go back and say that, but it's going to get done, but no specific news on NAFTA. Down in the U.S., Redbook chain store sales plus 3% year over year versus plus 2.9% last week. Retail sales in March up 0.6% month over month and 4.5% year over year. So sales at stores continue to go, whether it's Home Depot or Walmart or wherever you're spending your money down in the United States. The money continues to flow in, and that's because the money continues to be there. And you see that with the earnings, that these companies continue to be able to put out products.
Pretty good earnings.
And this is a global thing. This is not something to sleep on, that we think this is just the United States. There's other countries that are growing at really good rates that these companies are able to do business with. They're exporters to a lot of these other countries. And you need to remember that unemployment's low in Canada. It's low in the United Kingdom. GDP in China is off the charts. I mean, things are growing around the world. And I can't believe that there's so much sentiment in the marketplace when we watch the news media about the negatives. They harped on the trade war. They harped on all this stuff, and things seem to solve themselves quite easily, and we find a soft landing spot, and things really aren't as egregious as they make things out to be. And I find it's kind of sad that they treat financial news like they treat the regular news, where they lead with the blood and guts.
Right. Yeah.
And they don't emphasize the depth of how good things are, because things are still, as you go through the breadth of the information, things are so 95% good and 5% bad, but that 5% bad sure stirs the hornet's nest. GDP Nov Forcast 2% for GDP growth. It was 1.9 last week. It was 5.4% like a month and a half ago. It's finally in line basically with the Atlanta Fed tracker. That's GDP's a lot more concise, with a 1.9% forecast at Atlanta Fed tracker versus 2% previous. 2% GDP now, 1.9% Atlanta Fed tracker. We're right in line now. We're 0.1 off for the forecast. It was never supposed to be 5.4.
Right.
Obviously, that was not the expectation. We thought that number was just ridiculous. I couldn't believe they were actually quoting that a few months ago. And as it's come down, it's a lot more believable. And I think we're now totally in line with what the expectations are. MBA mortgage applications finally took the turnaround. See, last week we talked about the 30-year being down to 4.66, and we still didn't have the turnaround. It was negative in the composite index, negative in purchasing, negative in refi. This week, positive composite index up 4.9%, purchase index up 6%, refi index up 4%, and the 30-year remains unchanged at 4.66. Does that mean we see more positive next week, now that people have settled that 4.66 might be kind of the cheap? You might not actually get it much cheaper than this. This might be the uptrend, right? You might.
Well, you should see it next week.
I would like to think that people have understood, like, if you're going to do this, you're going to have to do it now, or you're going to have to wait a while, because we're going to have a big interest rate correction. So if you don't have to go out and get it done, I wouldn't. If you've got 4 years left on a decent mortgage, why go refi now? But if you're going to make a move now, if you're going to get into something, things are only going to get more expensive.
Might as well do it now,
Not only the housing prices, because everything else is going up, including wages and stuff, but it's all these little add-ons, these interest rates.
Oh, for sure.
It's all that little stuff, right? You're not coming full cash.
People don't forget. Remember that kind of stuff.
You're not coming full cash, right? You're coming expecting payments, probably over 25 or 30 years. So it's all getting a little incrementally more expensive on every different end. Now I would imagine is the time to strike while the iron's hot. If you've been in this economy and doing as well as the economy's been doing, and let's hope a lot of our listeners have been, because the economy's been doing fantastic, you're probably in the right position where now that you know the economy is definitely turned over and we're seeing an increase in pricing, interest rates, all that kind of stuff, but you've done well enough. Now you strike while the iron's hot. You get into a house, you do what you got to do, and that's because you were smart enough to be prosperous through those years where it was you could ride with any horse and win the race, right? So let's take a look at March housing starts, 1.319 million versus 1.264 million estimate. So obviously the housing starts beating the estimates. Jobless claims, the initial jobless claims down 1,000 at 232,000. Continuous claims down 15,000 at 1.863 million. What can you say about the employment in the U.S.? Like, the initial claims down, continuing claims down. Like, they both missed estimates.
Right, but they're still down, though.
Estimates were for things to be even better than they are, but the numbers are still down.
Yeah.
It's to live in these times. I don't know how you look at these like jobless claims numbers week over week and month over month and see the down and realize that you're at like these historic lows. You keep beating these benchmarks of historic lows, and it doesn't just like boggle your mind from where we were 10 years ago, where people were talking about like the superpower of the United States potentially kind of being off the table a little bit.
And now look at it.
And it's completely back to being the number one country in the world economically by like, it's not even close. It's not even close. There isn't another country that's not even playing around with this. And there's other countries doing phenomenally. That's the thing. But it's just the U.S. because they're so big and they do so much internationally. And when they blew back up, man, they blew up. And it's just people can get jobs everywhere. And income's going up. Wages are going up. It's a
beautiful time.
I'm telling you, man. I'm telling you. I look at this stuff and it makes me really happy for people. Like,
for sure.
I hope people are able to capitalize.
Now's the time to prosper, right?
You learn about the world. Learn about how everything you drive down the street and look at has probably been built, manufactured, serviced, parts. There's something involved from a publicly traded company. You can't go nowhere. You can't buy nothing. You can't look around your house without realizing that you're enveloped in money.
Oh, yeah.
All you have to do is hitch your wagon to the winners. You don't have to go make the products. You don't have to make the fridge. You don't got to make the plane. You got to make the right choices. You just got to hitch your wagon to the right winners, right? Like it's and in good times, it's a time when people can really foster the fire to get this, to be involved in this over the long haul, because they can actually prosper. They can see themselves doing better than what you do in the downtimes. When I've been through downtimes, and you have to then be able to fall back on the fact that you've done this enough that you remember what the good times are like, and when the good times roll, that you roll with them, so you go through the downtimes. But for a time like this, for people to get in, and which we're hoping people do, and we motivate people here to do that. The thing we want is we want people to get in and get that fire kindled up, so that when times get a little rocky, they're like, I'm already all in. I love this. I'm all in. I love this. I make money because I make smart picks. I go work hard for my money at my job, but then I invest that income that I have that I don't spend on my whatever else. I invest that for my retirement or my boat or whatever it ends up being, but I do it so intelligently and I like it so much. I'm competitive with the market now that you stay in even when the times are bad, and you become a really good investor over time. And ultimately then in the end game, when you're 50, 60 years old, you win out of your circle of friends because you're the aggressive one with your money. And they're not. You end up winning. U.S. rig count, just as the last thing for the United States, +5 to 1,013. We seen last year the rig count went on a run. I just seen this number crack 1,000, so I figured we better report on it. I haven't reported on it in a few weeks. Oil rigs up +5 to 820. Gas rigs are flat at 192. You can expect more pickup. I mean, we're seeing prices up. Obviously, there's some sort of glut in oil supply somewhere. The pipes are built. Let's get them to capacity. We were talking earlier about sectors that I don't think are overbought by a long shot. Maybe look midstream. Midstream's not bad. Those pipelines already exist. It's next to impossible to get new pipelines up. You see the red tape that's going on at Kinder Morgan with this pipeline between Alberta and BC. Pipelines are almost impossible to get up.
It's been going on for quite some time now.
As the rig count goes up and more stuff gets pulled out of the ground, those pipelines are utilized nonstop. They're up to capacity. They're running 24/7. There's no new pipelines. You go look at the midstream sector, very, very underweight, man. I'm telling you, that sector looks delicious. I can see three or four companies where there's money over the next couple of years, especially if oil stays anywhere near where oil is. So if you have any kind of a positive outlook on the oil price, if you're involved in the oil future at all, look at midstream. I think I wouldn't look at the actual guys pulling it out. And the refiners, none of them, but the midstream guys, the pipelines, because it's hard. It's impossible to get a new pipeline up. You can't get anything through legislation. There's too much red tape and environmentalists and all this. When you talk about a company like Enbridge, they got the most kilometers of pipeline in the world, and all their pipelines centered in North America. And North America is the most rich oil country or continent that there is when you talk U.S. and Canada.
Right, for sure.
We got more than Venezuela. We got, because of the square footage, the amount that we can pull out through fracking. I mean, they got the most kilometers already of pipeline, and we're pushing it out. U.S. broke their export record last week.
That's right.
Where do you think that oil's moving through? Pipelines. I don't know. Yeah,
right,
rig count up. That means look into the pipelines because obviously that oil is going through. It's not being carried by Dixie Cup. I can tell you that. China's GDP in the first quarter, 6.8%. So our friends over in China in their burgeoning economy continue to grow at exponential rates. How much do you think of that is fake?
I don't know.
6.8 GDP. How many ghost towns do you have to build?
Oh, they've probably built thousands by now.
I don't know, 6.8%. When they consider themselves, when you talk about World Trade Organization and stuff, and they consider themselves still like a growing economy, as opposed to being like a full-on first world economy, I don't know. You think about what they do there and the way that they kind of skew the numbers making them, because that GDP would settle a lot if they stopped doing a lot of internal useless projects that just was like busy work.
Right.
They have the money, they make the money so they can do this busy work, and they do. But it's a bit of a skewed number, but still 6.8%. China's growing exponentially.
Oh, of course
as they drive multitudes of people from rural China into cities, and that really is happening, right? Like, so let's not pretend like it's not happening. China is definitely a bustling first world economy, but they get looked at as kind of in a gray area when they're firmly first world.
A little bit,
There is no gray area,
that.
right?
No.
Like, it's like a old world look at China. Like, it's not imperial China anymore, right? It's totally different. UK unemployment fell to 4.2%, topping 4.3% estimates. Average earnings in the United Kingdom up 2.8% year over year. That's ahead of inflation. Unemployment falling in the United Kingdom as well. We see it in Canada. Everywhere doing very, very well. The economy is doing very well. I'm glad you let me do the economy without like forcing it.
Right.
You wanted to force it.
I did.
You wanted to know how good things were. You know, people get off on the other numbers, the like stories, and I do too. We get in deeper, but those numbers matter so much more because when you look at that big overlay of everything doing well enough,
that affects us more than like these big corporation kind of stories.
Like, when you're individually invested, I can see that, but that right there is
affects you everyday man.
That's your green light to tell you things are okay.
Yeah,
there's enough stability across the board that things are okay, that you don't need to concern yourselves with if the roof's going to cave in.
Yeah.
All you have to then concern yourselves with is the next part, the headlines, the stories, the companies, how things are actually doing, where things are going, and that's when we're actually going to make a little bit of money, right?
No, that's for sure. Well, now that economy is done, it's time for headlines. So let's look at some of the bigger stories of the week. Now, the biggest story of the week, I think, wasn't NAFTA or trade wars, but came from a small company called Apple.
Oh, yeah. Yeah, that's Friday's story, right?
Yeah,
this is what we're talking about. This Morgan Stanley story. Okay, so Apple got knocked down. They were already down 1% in the week. They got knocked down on Friday, 4.1%. Now, I want to stress to everybody, when you go look at Apple's stock, Apple's in a P/E range. It's like 17. They've got like $100 billion in cash. They got like $19 billion in short-term debt. This company has nothing but wiggle room to move. Their PE is nowhere near those like tech spec out of range PEs. It's totally in a nice competitive spot. I don't think Apple's up 16+% still over the 52 weeks, even with this down week of over 5%. Yeah. Apple's still a strong company. Morgan Stanley, though, let's just we'll tell. Morgan Stanley's got iPhone estimates shifting in the June quarter, not this quarter, from an estimate of 40.5 million to 34 million. Now, the average estimate from analysts is 43 million. Apple's estimate's 40.5. Morgan Stanley has it all the way down to 34. So this is a significant drop-off in actual iPhone sales and shipments, right? The problem is, though, is this is kind of based on data out of China. It's not based on Apple, and it's not based on, like, we're not basing this on a forecast of anything where consumers are saying we're going to buy less or we're expecting consumers to buy less. See, Taiwan Semiconductor, they're the biggest supplier of components for the iPhone. They lowered their sales guidance, and their sales guidance got tied into less smartphone sales, obviously, because that's the main business of theirs. And then Morgan Stanley tied it back around to Apple, which is fine, because I do understand that.
Right.
But I think to adjust the shipments so drastically based on just Taiwan Semiconductor's sales guidance changing and no actual Apple report and no other third-party report, I think is somewhat misleading and really kind of shook up the Apple market a little bit.
For sure,
and was kind of unfounded, I thought. I thought it was like more like a reason than anything else, where you're like trying to like slap somebody on the wrist or something.
Right.
Why are you stirring up problems when it doesn't need to be that? Because like Morgan Stanley could easily came out and had somewhat more of a, it didn't need to be so bearish, let's say. They didn't need to just go so off the other side and say like it was gonna miss by 6.5 million.
That's
and
right,
then they asked Apple to change their forward guidance. Like they made like a note that Apple should change it. Like Morgan Stanley knows better than Apple does. So I don't know.
It's pretty bold to be like, you guys should change this.
Morgan Stanley knows a lot, but I thought it was a little bit harder hit than it needed to be. And when I looked deeper into the stock, I thought maybe it was just, okay, hey, I don't own Apple, so let me take a look a little deeper. I thought maybe it was stats-wise that it needed a little tumble and just some bad news pushed it. But when you look at it, PD's great. We know the capital's great. The company's in strong standing. There's no problems that we know of. So like, don't manifest fake problems. Let's let things happen as they happen, right? Because like, I just don't see the point in estimating something so boldly that very easily you could be wrong on. You suffer no blowback, and this company suffers all this potential blowback right now.
Oh, for sure, yeah.
Like it's pretty bold. I don't know. I would think if Apple thought they were going to miss by so much, that Apple would just let people know.
Yeah.
They're not one of those smaller companies that hope to ride it out, right? They come out and just probably say, like, we really don't expect to be making estimates in the June quarter, right? Like, the estimates should be considerably off what guidance was. You would expect Apple to do it before Morgan Stanley.
Yeah, I don't know what they were thinking Morgan Stanley was coming out with such a low number like that. I don't know. All right.
Yeah, it is what it is.
Well, it looks like Canada might be winning in one industry, and that seems like the online gambling.
Okay, so we can't do it in oil and gas.
No, we can't. No.
Financials are great, but it can't run everything.
No.
That's 2/3 of the TSX, right?
And that is.
So what else do we got? We've got StarsGroup. Do you know what StarsGroup is?
Isn't that Poker Stars?
It's online gambling.
That's
they own Poker Stars.
That's right. They
bought Poker Stars back in 2014. They went out and they actually bought one of the biggest companies over in the UK that does online gambling as well. So StarsGroup, the parent company of Poker Stars, agrees to buy Sky Betting and Gaming for $4.7 billion. And this is going to make them the largest publicly traded gambling company in the world. This is the biggest deal that in the gambling industry since Stars bought Poker Stars back in 2014. So now they're the biggest. We're Canada. We're number one. Yeah, I don't care what gets money into the stupid money.
Yeah, that's right.
If you got to get liquored up and bet on a horse, or you want to play some online blackjack, come to Canada. You could do it from wherever, right?
This is online. Wherever. Yeah,
you could be in space. You can be in the space station.
Yes,
licked as long as you got a MasterCard or Visa. I don't know if they take credit. They probably don't. That's probably not allowed. It probably has to be like a debit out of your debit account or something. I don't know how online gambling works.
No, they probably got credit card.
Really?
I can imagine.
Don't you think they would have some fail-safes for people being like habitual gamblers and then not allowing them to like just max out credit cards in the default? I would imagine.
Maybe, yeah, probably.
I'm going to imagine there's some sort of credit card
I thought
thing.
This through, yeah.
Yeah. So like, but yeah, you go on there, Canada, number one industry, dude. We're taking over.
We are.
Doesn't matter what we're taking over in.
No.
Taking over in online poker.
I'll take it.
Royal flush. I'll take it.
And, well, let's move on now to Scott's Miracle Gro.
So what do you want to know about it? You want to know?
Well, are they the reigning champion now that the smoke is kind of settled or cleared?
So the dope industry. So you get doped up. You get doped up in Canada, and then you play online poker. See what we got here?
Oh, look at that!
Why do you think the financials are doing so well? Why do you think TD and everybody are doing so well? Everybody's on a loan.
Put the two and two together.
They got loans to pay back their loan sharks after they got doped up and played too much online poker or whatever, right? So that's why TD's doing so well.
Yeah, that's so true.
Quite the trickle down effect. So okay, we want to know who's winning the marijuana game. Everybody, Canopy. Is it Aurora buying CandyMed? Is it Afria?
That's right, yeah.
Who's going to win this? All these companies, overpriced, built on debt. If none of these companies take this industry from being a domestic, in national Canada company, and don't go international, don't get into Portugal, don't get into the Netherlands, don't get into the United States. Whenever the door is open to allow some sort of legalized marijuana or medical marijuana, if these companies don't become the main exporters, this industry, this sector in Canada, already way overpriced. way overpriced without any outside investors even involved. And I think outside money's still going to get involved. Like we saw Constellation get involved with Canopy, right?
That's right, yeah.
I think there's still going to be more outside money. You've got a lot of companies built on debt. Who wins? Where do you make money in the medical marijuana industry if everybody's already way overpriced? If it's all built on debt and we don't see where the actual major forecasting of sales are going to go beyond just selling to Canadians? There's only 36 million of us.
Yeah.
You're going to need to sell a lot of dope to make your money back,
yeah.
right? So I don't know any millionaire drug dealers, so I'm not too sure how you're going to do it. So when you look at the ETF in Canada for purchasing medical marijuana, you'll notice one company inside that ETF that kind of stands out as a little strange. They're not selling dope. They're Scott's Miracle Gro. They sell the fertilizer that goes into it. But not just in Canada, pal. They sell the fertilizer that goes into it for everybody that grows dope everywhere in the world. Not only that, they sell fertilizer for everything else. They're one of the main brands you will see at Home Depot or Lowe's.
For sure.
Selling fertilizer to people running greenhouses, growing anything else. Growing pots outside your front door of tomatoes.
For sure, yeah.
You know what I mean? Scott's Miracle Gro is in on an industry that they're able to touch on every company that's going to do this in every country that they're in, with mainstream spread already. They're all over the place. Their brand name is entrenched. They're a company that's not built on debt. They've been making sales for many years before the medical marijuana or legalized marijuana industries ever came along. They were making money off marijuana when marijuana was still illegal and people were growing it with Scott's Miracle Gro.
That's right.
Now Scott's Miracle Gro went out and bought the largest hydroponics supplier in all of the United States, Sunlight Supply. So Scott's just got into lighting as well, because they know what market they're in. For $450 million. This company already serves more than 1,800 hydroponic retail stores across the United States.
Okay.
You want to talk about a winner that could be out of the medical marijuana industry given a bump from an industry? Scott's Miracle Gro. It's entrenched in other industries already. It's just burgeoning out into this, but has the ability to touch the whole industry, because they're such a mainstream brand that do exactly what all these growers need to the best.
For sure. Everybody knows the name Miracle Gro.
Everybody
does.
And because it works, there's almost next to no competition in the mainstream. You're not going to be able to get better stuff priced better than a company like Scott's Miracle Gro. They just spread out, got into the lighting and fixture business. You're going to now see them servicing over 1,800 hydroponic stores across the U.S. and further growing that reach in the medical and legalized marijuana industry. You want to talk about what could be the winner? There's a reason why that's packaged into the marijuana ETF in Canada, because that company will hold up those other companies when they fall. That company ain't going to fall with them, because their stock price is firm because of other industries that they're in.
That's right, yeah.
This has nothing to do with medical marijuana.
Just a little extra for them.
They stabilize this industry. Absolutely they do. And they just further stabilize themselves in the industry. I thought that was a huge story. You get tons of medical marijuana questions up here in Canada. Everybody wants to know. Yeah. Canopy, Aurora, everybody wants to know. You want to know what I'd keep my eye on? I'd keep my eye on Scott's Miracle Gro.
Huh? Well, why don't you give us the rest of the headlines? Let's just streamline this and get it out.
You want to streamline it and just get it out?
Get it out.
Get it out. Maybe I'll slow it down a little bit for you.
Whichever way you want
partner.
To deliver it.
Toys R Us.
That's right.
Up here in Canada. They could be alive.
Maybe.
In Canada.
Just in Canada.
And who knows what it could be. Like, is it going to be all 82 stores across Canada come back? Who knows? So, do you know who Prem Watsa is? He runs Fairfax Financial out of Toronto. They originally were the company trying to buy BlackBerry when BlackBerry got sold, was it 2013 or whatever? They were originally trying to do it before BlackBerry got the big cash injection to get back on pace where BlackBerry's doing really good. But Fairfax was trying to buy into BlackBerry back when BlackBerry was still selling the Storm, still making the phone. So Fairfax made a $300 million bid to purchase Toys R Us Canada. So that's all the assets, brand name, all the good stuff, right? But who knows what any of that means. Competing proposals are welcome until Monday. So that's this Monday. That's by the time you're listening to this, I would imagine this proposal period is up. Fairfax Financial would receive a 3% break fee if another bidder is chosen by the people that are dispersing Toys R Us assets. So I would imagine it's the bankruptcy court that's doing it at this point, right? Whoever's liquidating this. So Fairfax would receive 3% if this doesn't go according to their plan, this $300 million bid. It's 82 stores across Canada, like I was saying. Funny thing is True was cash flow positive since September. They filed for bankruptcy in September, and they were cash flow positive all the way until they got closed. They made money the whole time. They didn't lose any money.
Was that just Toys R Us Canada?
No, total.
In total.
In total, like based out of New Jersey, cash flow positive. They made $90 million, owed 60-some million to creditors, had $30 million in the bank when they got closed because they had a better than expected holiday season.
Ouch.
Yeah.
Ouch.
No doubt. And they couldn't get floated the rest of the money to just stay open, right? It looked like too much of a risk, but they had a decent enough holiday season. And they actually were cash flow positive when the doors closed. So who knows how this will get turned around?
Yeah, who knows?
Once Fairfax buys them, I don't know what they're going to end up doing with them. If this is going to become a much smaller little niche retailer, it could be an online thing.
Yeah.
Maybe they pair it up through an Amazon or something.
Yeah,
who knows what ends up happening? It's a risky investment as far as I'm concerned.
Definitely is.
$300 million for Fairfax, who just priced some debt earlier in the week, to be honest with you. So we'll see what Prem Watsa, who is a fairly aggressive investor, decides to do with this, because he tried to buy BlackBerry, now buying Toys R Us. These are big brand names.
Huge names.
What he would have done with BlackBerry, what they've done now, BlackBerry probably doesn't have the brand name recognition that now, but they have a much stronger business model, something ridiculous compared to what it was. If they would have stayed the course the way they were, when he would have got on board, I'm not sure they'd even be in existence anymore. So I wonder if this Toys R Us plan doesn't need to be molded quite nicely before launched. And not just thrown right back together into these giant retail locations.
So Monday was the cutoff for
this coming Monday is the cutoff for any other competing bids. Which I doubt they're going to take, because then it's going to have to be a pretty decent bid. I don't see it coming. I would imagine this probably ends up getting done. Tesla Model 3 production line has a temporary shutdown, says reports. What Tesla's kind of saying is that the Model 3 has had a couple of temporary shutdowns before, as they just adjust the way they do things. Apparently, as you're ramping things up, there becomes these periods of time where you need to shift around the way the productions run, maybe the assembly floor. Something has to be changed.
I read it was like 4 to 5 days.
So they have quick little moratoriums. People can take holiday days, or there's a bunch of different options that give their employees a chance to take a few days off as they get things. It's not a matter of things being broken and not working. In fact, that Fremont plant that used to be run by, I believe it was General Motors, Tesla has the injury rate down to a half from when GM was running the Fremont plant. So they're very proud of the fact that it's been down 25% this year, but it's down half from when GM ran that exact same plant building cars in there. So the injury rate at Tesla is doing well. They're very, very keen on, like renewable energy and safety, and it's a very good company, you would imagine, to grow in, that it seems like it has very strong personal morals. I guess you'd have to be a person who'd be a little more gravitated towards that to want to be an employee of that. But if you're someone motivated by that, they seem like the type of company to work for, where personal morals are very much reaffirmed. They're looking to make sure people's well-being is definitely taken care of. On top of that, the big news from Tesla, 6,000 Model 3 cars produced per week by the end of June. Pourquoi? You say what, Elon Musk? 24/7 operations have gone into effect. They added another shift at the Fremont plant. People are working round the clock. Apparently, they are expecting this. They're expecting operating cash flow positive third and fourth quarter. They're expecting 6,000 Model 3 cars a week by the end of June. They're expecting. I'm wondering if they're ever going to be due, or if this is kind of one of those fictitious pregnancies.
I think
because they've really told us a whole lot of numbers. They love telling us expectations. Anytime they actually give us like the real number for that day, it's a little disappointing.
Very disappointing.
But when they give us the number for the future, it looks so promising.
Oh, so good.
There you go. 6,000 Model 3 cars produced per week by the end of June. 24-hour-a-day craftsmanship at the Fremont plant is what's going on. They've got little tiny men in there tinkering with these Teslas.
Definitely
little Keebler elf men. They got to make sure every little nook and cranny is perfect. You don't want to... When you're only making 6,000 cars a week, you don't want to screw that up.
No.
You can't have a mass recall. All of your cars will be off the road.
For sure. I hope they hit their quota, though.
Speaking of cars, Aston Martin. Have you ever heard of them? They make cars for, James Bond.
For sure, yes. I've
Yeah,
heard of
they're
them.
an
I definitely heard of
English car company.
Yes.
Their cars are pricey. Send the money, care of Cody Noakes to 145. No, I don't want an Aston Martin. It's fine, but you can still send the money. Aston Martin, very expensive.
Very, yeah.
Beautiful vehicles.
Sleep,
Beautiful.
yes.
English, just money. Mwah, I'm English, last name, right? They're going IPO. They're going IPO over in the London Stock Exchange. They've hired 7 banks to underwrite it. Basically, they're not sure who's going to like frontline this. It's going to be Bank of America, Merrill Lynch, or Credit Suisse. A couple other companies were named. I know that J.P. Morgan and Goldman are in on it, but they're in on it on a much more minor level. Valuation about 4 to 5 billion British pounds. We'll see.
We'll see, yeah.
We'll see. It would be nice if it was coming online over in the United States. I don't really like having to be over in the other markets.
I guess Conco want to keep it in the house, right?
Yeah, I don't know. I guess there's English companies that are on the NYSE or on the NASDAQ. Like, they fit on the NYSE. They're not a huge valuation company,
sure.
you know. Like, but it's still English news and all. It's just, you have to go to another exchange. There's all this exchange rates and stuff, and then I'm buying things in British pounds and
stones
I like Aston Martin. It sounds like a fantastic idea. I'd love to see the company's actual balance sheets and stuff, and see what the company's doing and how they're growing.
Oh, for sure,
right?
So
as this comes to fruition, this might be a company might get a hold of one of these banks and just has to take a look at a prospectus. So why not? When you look at like a Dropbox or something, if you were to think about buying the IPO, the industry's so new that for me to look at it, I don't really know. Like, whatever numbers you tell me, the industry's so new that those numbers are going to change 40, 50% potentially in the next year. And who knows if they change in your favor. Aston Martin, fairly entrenched company, really entrenched industry. You start looking at that perspective, you're looking at numbers you can compare right now to Ford and everybody else. Mm-hmm. Obviously, they're not going to compare to these major car companies. The sales aren't going to be there. But you're going to be able to compare all the particulars with those companies and see if the margin to make money is there. Yeah. So Aston Martin, definitely a company I'd be interested in. Come to the NYSE.
For sure.
Come over here. London Stock Exchange. Kinder Morgan, having nothing but problems with this Trans Mountain pipeline. BC is not being very conducive to a favorable agreement with this. They just do not want to see oil come to British Columbia. Apparently, Alberta, the meeting with Trudeau didn't work. 2 premiers sat down, didn't work. Notley then threatened to cut off oil to BC from Alberta. Then Saskatchewan, that sends like a little bit of oil to BC, they threatened to cut off oil. There's all sorts of protests with, cultural groups and environmentalists going on in British Columbia. People who hate capitalism. I saw a sign in one of the protests that said, "Water is life." That's what it said. Right. Yeah, that was its big
water is life.
Yeah, life has a lot of different faculties to it, and one of it is being a thriving economy to take care of the future generations of this country, not just your little incremental emotional needs today. Yeah. I know you're very wrapped up in your own stuff, but we're talking about progress, and the longer we dig our heels in the sand, the further down the progress line other countries go, and this country's already lagging behind because of little issues like this that don't just get rectified by government coming in and saying enough. Free market has the right to do its job here. Enough with your protesting. But apparently we're not going to do that. Kinder Morgan has slowed down any kind of spending on the pipeline to the absolute minimum they have to, basically to just keep it from falling apart at this point. But this pipeline is never going to get finished, because nobody wants to step in and be the bad guy and tell a bunch of people to go take a seat, because money talks and all your other sad stories walk. But it doesn't here in Canada. It's the complete opposite, where sad stories apparently pay bills. Domino's, much smarter story down in the U.S., where capitalism reigns supreme. You know how I know capitalism reigns supreme in the United States?
How is that, Cody?
It's through Domino's.
Is it?
It's through a company like Domino's, because when you're sitting around and you're just like, you know what? I've given up. I want a pizza right now. I don't care. I don't care about this diet. I don't care how I look. I don't care that I have no money in the bank. I want it right now on this park bench that I'm sitting on, that I'm soon going to be living on. And Domino's has added 150,000 locations across the United States.
150,000 more?
that they are going to be delivering to.
Oh, okay.
Hotspot delivery.
Hotspot.
So when you're broke but want Domino's and you're living under a bridge, that bridge is probably in the Domino's Hotspot app, and Domino's will deliver you a pizza right to there. That's capitalism.
That is capitalism.
That's capitalism.
That is.
I'll deliver a hobo pizza under a bridge any day of the week to make $1. Kinder Morgan should move down to the United States, start delivering pizzas, stop dealing with these finicky Canadians.
That's right.
That's what I think.
Right.
Domino's, 150,000 hotspot locations, beaches, anywhere. Park your car in you're out of school, you're watching your kid's soccer game at some community league or something.
Want a hot pie?
Yeah, you want a pie. You've seen some pie and you want some pie. So now you're in the market. Domino's is coming. Yeah. Get on the app, boom, boom, boom. Domino's is coming to you. 150,000 locations.
That's a lot. That's a
Good
lot.
way to spread yourself around.
No doubt.
You didn't have to add no overhead. You're already driving around. You're already making the pizzas. It's not
right,
like you had to build new business.
No.
You just go to these other hotspots.
Instead of going to like an actual house, you're just dropping it off.
I ordered pizza yesterday, but I waited till I got home to order pizza because I didn't want to stop and pick it up. But I made a couple of stops. I could have coordinated it perfectly with the guy while I was getting gas.
Right.
To just meet me there. Like I'm halfway through filling my tank and he just shows up with your pie at the gas station. Boom. That's in the car. Right. And now I'm headed home with my pizza and I don't have to have some ruffian come to my door.
That's right.
Yeah. Now this ruffian can meet me down the street. Domino's. That's how you do capitalism, man. Disney and Fox are working on a joint venture. Now, we're talking about Disney and Fox. They're already working on a joint venture.
That's right.
As far as actually getting together and being the same company. But this is Fox that handles the sports, not the Fox that's coming to Disney. So Fox that handles the sports, they've got a contract with the UFC, an exclusive contract to air the UFC on network television that comes to an end in December. We're hearing that Disney and Fox potentially might be doing a joint venture signing the UFC for what the UFC is asking for this time, $300 to $400 million a year. They're currently making about $120 million a year from Fox. So that's a significant raise the UFC is looking for. This would give Disney's ESPN Plus as many as 15 UFC events on the ESPN brand next year. Now, this negotiation's going on and going to be done soon because this contract expires in December. This could be a big coup for Disney. Be bringing in some serious stuff, bring in the UFC.
That's right, yeah.
Right? UFC is big business.
Fox pays what, 120 million?
Fox pays 120 million right now.
And UFC wants 300 to
400? 3 to 400. So I would imagine this gives Fox this. I would imagine maybe they go 50-50. Fox keeps the same amount of events. This definitely means there's going to be more live events on TV. But we know Fox's sports not going with the Fox deal. That the Fox Sports and the news are staying behind.
That's right.
Just movie studio, TV studio, that stuff is going in the Disney deal. This would give Disney another feather in the cap as they move into streaming, not in the Disney side, but in the ESPN side, which I think really is the one that needs a kick in the pants because ESPN as a brand has been getting choked unconscious like they're fighting the UFC for a couple of years. So the ESPN could use a little breathing room. Johnson & Johnson, they've got a drug called Imbruvica. Now, Imbruvica is working so well with patients to cure cancer. The Johnson & Johnson, they don't need to be giving the patients the prescriptions they've been getting. See, they've been getting prescriptions for, I think it's like 3 pills a day, but they've been finding that you can actually front load these pills at 3 pills a day. I think they're 140 milligrams a piece for a period of time and then start to taper the pill, and the pill is still effective. I guess that maybe the half-life is that long or something. Right. The pill stays that effective for distance of time. You can taper to 2 pills and 1 pill, and you need less pills for the entire therapy of you trying to cure your cancer. And let's hope that works.
Sounds good.
So they found that they need less to do this, and so what they've done is they've got rid of the 140 milligram pill. They're not sure if they're getting rid of the 70 milligram pill. I'm assuming they're going to go to a 35 milligram pill. They say they've been working on a 1 pill a day treatment since 2005. Obviously, they haven't come up with that yet. But what they did come up with was since they need less pills, they better increase the price per milligram. So they've increased the pill price because it's doing so well.
So well.
It's curing your cancer. So we don't want you to be getting it for cheaper. We want to make sure we
Right.
make
Oh,
our
for
money
sure.
back.
Why not?
Johnson & Johnson needs to cure more cancer, so they do need to make that R&D money back.
They do, yeah, for
so
sure.
they're definitely going to do that as they find out less pills are needed. They've raised the price per milligram. Medicare patient copay will double to $10,000 from $5,000. So it's going to be a little more expensive as well.
A little bit more.
But
Yeah,
it's
for
effective.
sure.
And you need less pills, and maybe there'll be less side effects. You'll be lighter in the pocket. That'll be a side effect.
Yeah,
That'll be a side effect.
That is a side effect,
right?
yeah.
Your wallet will be a little light.
Ouch.
Thanks to Johnson & Johnson. Put a little baby oil on it. You'll feel better.
Thanks, Johnson & Johnson.
You'll feel better. FDA approves the combination of Bristol Myers Squibb's Opdivo and Yervoy for first-line kidney cancer treatment of renal cell carcinoma. It has been shown to significantly increase the survival over the current drug that's out there on the market, Pfizer's Sutent. So this is a big thing, man. Like this was huge news. These two drug combinations showed like the survival rate was up so significantly that this all of a sudden becomes the default.
Right.
This is the one now. So Bristol Myers Squibb all of a sudden in a sector that they're in a medical sector that they're in, they have just taken over as the leading drug the care. This is the leading care treatment for this renal cell carcinoma. That's a big shift. Now, they've been combining a lot of this Opdivo and Yervoy with a lot of other drugs, and there's a lot of other stuff in first, second stage approval, but this is third stage approved by the FDA. So anybody that's on that Pfizer stuff right now, go to your doctor, right? This should now be available. This is FDA approved. This has shown the survival rate is so significantly higher that the idea that you're not using this as frontline treatment now, no matter what the price is, if you've got a renal cell carcinoma, why take any chances with your life?
Oh, for sure, yeah.
This is definitely the answer.
Yeah,
big news early in the week. This is big news for Bristol Myers Squibb. This is big news for anybody out there suffering. Cancer's
for sure.
Cancer's dirty pool, man. That stuff comes in and snuffs you out.
Yeah.
You know, like, and anytime we get a little bit of an edge on it, they should be doing a better job of, from the rooftops, letting people know, hey,
Did you hear? Because this is big news. There are people out there suffering. Bristol Myers Squibb, this is a winner. This is an absolute winner in their it's a bullet in the chamber, no doubt. They're going to turn over huge revs from this. Amazon, CNBC reports they will focus on selling medical supplies to hospitals and smaller clinics as they had trouble convincing major hospitals to change their drug purchasing habits. Does this mean that forever and ever that Amazon is going to be out of the pharmaceutical business entirely? No. So they're out of it today, apparently. They could be in it tomorrow because they've got the logistics and they've got the money. They're going to sell medical devices and build little inroads with these other companies, and they're going to get their fishhooks in like they always do. And then they're going to launch a full stream attack of trying to get in on a well-diversified level. If it didn't work originally, a lot of these companies, they're also big multi-billion-dollar companies that deal with other multi-billion-dollar pharmaceutical companies. That's right.
They have a lot of friends. They have a lot of arrangements already in place. But over time, as Amazon gets in little by little, don't assume they're not going to have a big say at the negotiating table. And then they may relaunch this little endeavor of pharmaceuticals if they've even put it on the back burner right now.
I'm pretty sure that's what's up their sleeve.
Of course it is.
Of course.
They're going to make all the inroads they have to.
Tippy toe in. Just
sell
some medical devices.
Yeah, exactly. We'll sell you those little things that you look in the ear.
Exactly.
One of those.
Listen to the heart.
Yeah. Tippy toe in.
Amazon's
like the gorilla in the room, tippy toeing in. Shh, we're not coming for your business.
No, not
Don't
at all.
worry about us. We're just Amazon. We're shy. We don't like to make a lot of waves. No. Netflix is doubling their EU content spending to $1 billion. They are doing everything. They're doing stuff in all sorts of languages in all sorts of countries.
That's right.
Their original content is unbelievable. In their earnings, I talked about the full content spending that they're doing, which is just astronomical for 2018. Netflix is running away with it. Huge week this week. People love it. Great earnings call. They are spreading themselves like the plague. It's
Yeah.
unbelievable. There's no stopping them now. I relinquish my poor investing skills that I've never been invested in Netflix ever, and it's because I clearly don't know what I'm doing. Procter & Gamble are buying Merck's vitamin and supplement division to add to Procter & Gamble's over-the-counter medical business. They're going to pay $4.21 billion. That's after Procter & Gamble had fairly soft earnings this week. So I guess they're trying to diversify even further. Why go out and try to build your own vitamin and supplement division when you could go out and buy one that's already out there turning over $1 billion in revs every year already from Merck?
That's right.
So they're going to do that and probably be implementing that quite quickly as soon as everybody passes that and green lights the actual acquisition, because Procter & Gamble had very soft growth in a marketplace where they should be having a lot stronger growth. They were probably near, if not at, the most disappointing earnings call of the week. Yeah, absolutely. Facebook looking to design custom chips in-house for their consumer products, smart speakers, VR headsets, AI technology. What do you think about this? What do you think about a company, social media company? They're an advertising company. They're a data collection company. They're an ease of use company, I guess. They bring a lot of people together and make things easier to use.
That's very true, yeah.
Now they want to get into the hardware of things. They already kind of are. Granted, all the stuff that they sell hardware-wise is components built by other companies.
For sure.
Put together with a Facebook brand on it.
That's right. Okay.
A lot like Apple. We'll use this as the contrast because these are both the similar topic. We talked about one last week. What do you think about a company like Facebook or Apple that's doing the same thing, getting into processors, supplementing Intel processors, a company that's the best in the world, that's been doing it for 50 years, for their own processors in the MacBooks, Facebook doing it, Apple doing it, a good focus of money, a good focus of energy, a good way for design companies to transition into new markets. Anthony?
No, I believe they're going to shoot themselves in the foot with this. You've already got an established brand like Intel that's been doing this, like you said, for years. And you as a design company coming in and be like, well, now I just decided I'm a hardware company.
Because they're not. They are a design company.
They're design companies. Now they're deciding.
Apple designs phones. They
That's
don't
right.
build that stuff.
No.
They're trying to build the OLED stuff. They're having nothing but trouble. They're having nothing but trouble. Right? They invested a bunch of money into LG. It sounds like LG's having trouble getting started. It sounds like they're going to be reliant on Samsung for a lot longer than they were expecting to be reliant on Samsung. Those things cost $97 a phone. The phone only costs $360 to build. So the screen is the most expensive component individually. They don't build that. They don't build any of the components inside.
Nothing, no.
They're trying to build the screen. That's not working. Now they want to build a processor for the MacBook. Now Facebook wants to start building chips. What are these companies thinking?
I think they got their heads in the clouds. I think they just want to be the innovator of that kind of a new sector they're kind of branching out and like, oh, our chip is the best. We're going to use ours now.
It's such a, I understand the proprietary nature of both of those companies.
For sure,
Trying to own something. Facebook, no competition. They own the data of the world. You know what I mean? There's nobody that owns that data. It's very proprietary.
Yeah.
Apple, everything is very Apple proprietary. iTunes, everything is all locked into their devices as opposed to a Samsung, Android, where it's very open space, right? I understand that, but what a silly way to diversify. They've got so much money. People are waiting for Apple to make some sort of a purchase, an acquisition, branch out into something. I know they picked up a chip maker, a small company a while ago, but come on.
Yeah, this is just going to be a money hole, just a cash burn right there.
The generation of these things is so fast, especially phones. These smart speakers probably going to be the same thing. Imagine
for sure.
These smart speaker generation time is going to be a couple years. Because they're just going to get better and better and better. No one's going to want the old stuff. It's going to have to. Yeah. So when you talk about that, you could just put in your little chips that suck and you burn 1 or 2 generations real quick. And now nobody's invested in your product. Yeah. Somebody else that was smart enough to stay with Intel or Broadcom or whatever blow past you on level that you can't ever re-achieve.
I think they should just play their position, and the position is a designer, and let the people that build the chips build their chips.
Sometimes you just need to play your position.
That's right.
I would agree. That's probably the best advice you're ever going to get.
Yeah.
Sometimes you play to your strengths, ignore your weaknesses, play your position.
That's right.
Apple could go a bunch of different directions that I would be pretty gung-ho about. Facebook too. Allocating a lot of money and time into this and rolling whole segments into the idea of implementing this regardless, I think is not a good idea. No. I think if you wanted to do this on the quiet, on the side, and just see if maybe without ever coming out and saying, hey, we're doing this as an aggressive move to completely whitewash all Apple instruments with these Apple chips. Come on. You're right. You're way counting the chickens before they hatch. Just settle down with that. Opioids in the U.S. It's a big topic. There's an epidemic. I think Kentucky might be suing Bristol Myers.
That's what I heard too. Yeah.
The U.S. government's been talking about suing people. Opioid prescriptions, though, in 2017 were down 12%. That's the most it's ever been in 25 years. I don't know. I'm not sure how much you get people that need it, and you start making it harder for the people that need it to get it as well because of these addicts. It's such a conundrum. I'm morally confused as to which way I fall. The dark side of me says that just you give it to everybody. Let them all have it. Let them all have it, and let the choice of life sort things out.
That's true, yeah.
But then you revert back to how much does that weigh into the medical field, and how much is that just morally irresponsible? And then on the reverse, I'd say pull it all away and stop letting people have this and destroy their lives because they don't clearly have enough control.
That's right, yeah, for sure.
But then you wonder how many of these 12% that it's down were people who really need these prescriptions, who are now having to fight their doctors. And they're just in abject pain day over day because there's all these abusers out there. So it's a real catch-22, right? Like you're really trying to help the people that need the help, but you're really trying to keep the people who can't keep their hands to themselves away from the stuff. And it's a real tough. It's a tough divide. It's a really tough way to split things up. AT&T and Time Warner and the Department of Justice have been in court for a couple of weeks now. The trial wrapped up with AT&T CEO Randall Stephenson taking the stand, calling the government antitrust accusations absurd and defying logic, basically mimicking everything that the Time Warner CEO said on the stand earlier in the week. AT&T and Verizon are being looked into by the department. Now, wait. They're going to win this trial. AT&T and Time Warner are going to win this trial. This merger for $85 million is going to go through. Actually, Randall Stephenson on the stand dropped a little bit of news.
Did he?
Yeah. He said that DirecTV Now, that's already out there that you can buy, it's got sports on it. There's going to be a smaller, streamlined version of that where you get all the live TV, just no sports, called AT&T Watch. Going to cost $15 a month. So you still get all the TV, just none of the sports from DirecTV. AT&T Watch.
For $15 a month?
$15 a month.
Nice.
So that's coming out soon. Randall Stephenson dropped that on the stand. AT&T and Verizon are being looked into the Department of Justice. Do you think this is because the Department of Justice knows they're going to lose this case?
Of course.
So they're looking into colluding between AT&T and Verizon in regards to eSIM transfers. So the SIM card in your phone,
that's right, okay.
They think that they've actually colluded together to make it more difficult for companies to take your card and put it into a phone from a other competitive company so that it makes you less likely to change phone companies, because then you'll lose all of your phone numbers, all your photographs without transferring everything onto your computer. They make it a lot more convoluted, basically scaring people off potentially from making that transition. Sprint and T-Mobile have also been added into this investigation by the Department of Justice, but they're looking into AT&T and Verizon. I wonder if this isn't the Department of Justice going, okay, you beat us in court. You made us look bad. You called it absurd, right? You said it defied logic. You make us look silly. Then we're going to see if you're colluding. We're going to make you look silly. So
I think they might just make themselves look even sillier.
it's just timed out, just like this. It was like the same day.
Grasping at straws.
Who knows? Who knows?
Yeah,
Maybe
well, you know, they might be right?
maybe the Department of Justice got so much of AT&T's information while going through this actual
found maybe
court case
something
that they found something that looked a little fishy, and they're just looking further into that, and it might just be happenstance that AT&T gave them a fantastic case as to why they should merge Time Warner and AT&T together, but in AT&T's books, there might have been a little something alluding to collusion with Verizon, your favorite company.
My favorite
your
company.
favorite company, the colluder, Verizon, Boeing, and Embraer out of Brazil, one of the biggest, if not, well, definitely the biggest in South America, airline companies have neared an agreement that would form a partnership between the two companies. Now, the Brazil government has agreed to this. This is going to give Boeing 80.01% stake in the Embraer commercial jet business, and Embraer is going to remain 19.99%. This isn't going to be any of the defense or any of their high-end luxury planes.
Okay.
So this is only going to be commercial jets, obviously looking to get a lot of that Boeing technology. They don't want Boeing coming into Brazil, taking over the market. So the Brazil government wasn't going to allow it. They allowed that amount. Boeing gets 80.01. That was the max.
Okay.
But this is going to allow Boeing to come in a lot like Airbus came in and took over the Bombardier C-Series project.
That's right.
This is going to come in for their commercial jet project and definitely give them the cachet of being basically Boeing at that point, and having all the Boeing technology and all the R&D and all the pipelines that Boeing brings to the table. So I'm sure Brazil they liked that they didn't have to give away their national airline company.
For sure,
They didn't have to give it away, but now they're also probably quite happy that they've got a company like Boeing on board.
Oh, for sure.
You couldn't be partnered with anybody better, right?
No, Boeing, come on.
Wells Fargo fined $1 billion. Big surprise. Wells Fargo lumping in a whole bunch of stuff they weren't supposed to on mortgages and car loans. Wells Fargo just not playing by the rules. We're giving a bunch of warranties people didn't ask for. And the government just can't stand when you're breaking the rules. You know,
This isn't the Wild West anymore.
Yeah, Wells Fargo still thinks they're delivering mail in the Wild West.
I
This
think
is
so.
it wasn't working out. $1 billion fine. Boring. Are we boring?
I don't think we're boring. No.
You don't think we're boring?
No, I don't think so.
The people outside have been boring. I thought opening this window, this palatial estate picture window, looking out onto this magical enclave of vehicles and pedestrians, I thought we were going to see something, interesting. And there's been nothing. There's
nothing.
Nobody even to mock.
No, it's been quite boring.
It's been boring.
Yeah, very boring.
This is the boring company, as in digging in the earth. Totally different than us being, garbage at
boring.
this job. Yeah, boring.
Gotcha.
You even did the hand thing. Yeah, I like that, right? So Elon Musk owns this company. Basically, he's a $100 million investor, the $112.5 million in the startup. They're a tunnel digging company. They're on the final stages of getting their first job.
Is this under LA or something?
They're down to two. They're down to two companies. Those in Chicago.
Okay.
This would be making a tunnel that would run for expedient travel between downtown Chicago and O'Hare Airport, one of, if not the busiest airports in all of the United States. I've been in O'Hare Airport. You have to take a train between planes in O'Hare. I landed.
Shut up, really?
And then you had to get on a train in the airport to get to your other plane.
What?
That's how big the airport is.
That's massive.
It's ridiculous, right? So they're the last two competing companies for this bid. So this would be the big one, right? I know Elon Musk is in on a million different things. He's trying to make that weird tunneling. What's the... where they shoot people with an air compression.
Oh, yeah.
He's been working on a project from like San Francisco to Los Angeles, right? To do that. Like, it sends you like 700 and some miles an hour through like a tube. It's all air compressed. You inside the
are you like in a capsule or something?
Like an egg thing, and you don't even realize anything. You don't feel the pressure, the movement. No. So I would imagine this boring company is probably somewhat tied into the same idea.
I would think so, yeah.
Of making something to do with that. But
I think he's watched too much Futurama there.
He's in everything, right?
Yeah,
he's in so much interesting stuff that the guy is definitely a futurist. He loves
for sure.
the idea of where things are going, and I like to watch. I don't think I would be as brazen as he is, and to be in so many things at once and spread myself so thin. Again, I'm sure he's surrounded by a million smart people that he doesn't.
Maybe
have
that's
to be
just
in
the way
everything.
his brain works. He has to be just doing everything.
He clearly is.
Clearly
He's digging into Earth and he's going to space. So he's going both
Go
directions.
both ways.
He can't. Yeah, he's going laterally with cars. He's going vertically with space.
Going everywhere.
He can't make up his mind.
No, not yet.
The last story of the day, Wendy's is opening 600 new stores so that we can get Baconators a lot quicker.
Yeah.
Maybe Dominos will deliver them to the bridge we live under.
That's what I'm talking about.
By 2020, 600 new stores. And they're going to be giving the actual franchisees options on how these stores are going to be set up. They're calling it the Smart Family of Design, which allowing Wendy's to fit into like smaller space, what you'd think of probably more in like a little shopping center, as of like where Subways and stuff are, I guess, without the drive-thrus.
Right.
Potentially, maybe they wanted to have bigger Wendy's with more of a play area or any of that, because I know a lot of Wendy's,
I don't think any Wendy's ever had a play area.
So Wendy's is definitely going to have some competing designs that people that are purchasing Wendy's, the franchisees, are going to have the options of what kind of Wendy's they'd like to own.
That's kind of cool.
Yeah, it gives Wendy's a bit of a different flavor, as Wendy's is my favorite fast food.
Oh, I would have to say the same thing.
Yeah.
Like you said, Baconator, that's my favorite thing about it.
Yeah, I'm not with the Baconator, but definitely Wendy's is
spicy chicken's
that's my go-to fast food if I was going to fast food.
That smoky mushroom mountain or whatever burger.
That
was delicious.
Wendy's does good stuff.
Yeah,
they do good stuff. That is the end of the headlines.
That is.
It was a week full of lots of interesting news, but there was no major. Apple down 4.1% on Friday because of Morgan Stanley.
Biggest,
Scott's Miracle Grow.
Scott's
Miracle Grow to me. That was a big acquisition.
Well, now that headlines are done, let's hop straight into earnings, since earnings season is in full effect.
Okay. 16% of the S&P 500 have reported through Friday. 16%. 1/3 of the S&P 500 report next week. So 33% is going to get tacked on to that 16. So you can expect earnings next week. We're going to have 25 plus earnings calls. So this earnings is already going to be fairly deep. Next week, going to be even deeper. Alphabet, Intel, Microsoft, the list goes on and on and on as earnings is going to continue to blow it out of the water.
Sure.
Continue to. 81.5% have been better than estimates on EPS already. So we're doing fantastic on EPS. Beaten guidance 81.5% of the time. 6 major U.S. banks, JP, Goldman, Citi, Wells, Bank of America, and Morgan Stanley, saved $3.59 billion last quarter with the new corporate tax rates. JP Morgan said they paid 18.3% in taxes, way lower than last year. Goldman, 17.2%, again, way lower than last year. Banks expecting the 2018 tax rate to average out between 20 and 22%. If you've got a cough, my friend, just cough. You told me at the beginning that you had all the coughs out, and then I'm telling you about JP Morgan and Morgan Stanley having fantastic tax rates in Q1, and you gotta start coughing.
Came out of nowhere.
Are you gonna be okay?
I'm good.
I'm willing to give you CPR. If mouth to mouth
I'm definitely good. I'm good. Let's get this done. Let's go.
Okay. So Goldman, 17.2%. Banks are expecting 2018 to average out around 20 to 22% corporate tax rates. Way, way lower than what the corporate tax rates for banks were last year. Banks are obviously going to be spending a lot of this money, stock buybacks, wages, dividends, company expansion. With more money to go around, the money's got to go somewhere.
That's right.
We'd like to think those 6 companies, they know what they're, Wells Fargo and Citi, it's touch and go. Those guys, I'm wondering if they're banging their heads in the walls or eating paint chips at those 2.
They're doing that right now.
But JP Morgan and Goldman, I'm totally okay with that.
I think they're doing it. Yeah.
Whatever kind of money they get, they're going to do fine. Bank of America, I'm not too worried about. Citigroup and Wells, it's...
Touch and go there,
some days you wonder what they're doing over there. Let's get right into earnings. Celanese EPS $2.79, beat by 43 cents. Revenue of $1.85 billion, beat by $150 million. That revenue number up 25.9% year over year. Netflix 64 cents, beat by a penny. $3.7 billion in revenues. The revenue number only beat by 10 million, but that revenue is up 40.2% year over year. 1.96 million domestic additions versus 1.48 million estimates, so they beat that by 500,000. 5.46 million international additions versus 4.98 million estimate. They beat that by 500,000. Operating margin 12.1%, up from 7.5 in quarter four, like almost doubling operating margin. Total streaming ads of 7.41 million versus 6.32 million estimate. That beat by over a million. 2.6 billion in cash. $7.5 to $8 billion in content spending in 2018. Netflix is all over it. They're crushing it, right? They're crushing it. Everything's up. It's up, up, up. It's all up. They're spending tons of money. They got content everywhere, in every language, for everybody, and every different everything you could want. Netflix has it all.
Yeah,
it's done.
Have it all.
Yeah, I got nothing left. I don't know what ESPN or Disney or any other streaming company is going to be able to do to compete with what Netflix already has, rolling so far ahead. They're so far ahead.
Yeah.
It's unbelievable. What these other companies are going to play so much catch up. Every time I look at earnings from Netflix, you're just amazed that Netflix can make these kind of gains quarter over quarter.
Yeah, I know.
Like the estimates, there's so many analysts out there looking at these. How do they crush these estimates by so much? You take a look at Morgan Stanley. We're talking about Morgan Stanley giving estimates on phones.
That's right.
If they can't even get close to estimates on additions on subscribers at Netflix, what makes them think that they can guess on phone shipments 4 months out?
That's right.
Get off your horse.
Yeah.
Bank of America, Netflix trading at $327.77. Bank of America trading at $30.26. 62 cents a share, beat by 3 cents. $23.1 billion in revs, beat by 40 million. That number's up only 3.8% year over year. Consumer banking net income, $2.69 billion versus $1.89 billion last year, so up almost $1 billion, $800 million in consumer banking. Global wealth management net income, $1.035 billion versus $773 million last year, so up $300 million. And total client balance is up 5% with the global wealth management. Net interest income up 13%. Average deposits up 6%. Loans up 8%. Bank of America, the rev number wasn't crazy over last year. They beat on earnings. Bank of America, strong retail bank. There's no two ways around it. I don't know what else to tell you. It's not the strongest financial company in the United States. Strongest retail bank? Probably.
Probably, yeah.
But they're not everything. They're not JP. JP is so deep. JP does retail, but they're so deep. Goldman doesn't do retail, does investment, and does a bunch of other stuff. But Bank of America, as far as boots on the ground, Bank of America, strong bank, good earnings call. In the middle of every financial, though. Totally. If you're taking it with whatever every other financial did, I would say it falls into the middle. It doesn't fall to the top. We've seen the top out of JP. We're going to see the top out of Goldman here. United Health, $3.04, beat the street by 12 cents. $55.19 billion in revenues. That's $55 billion in revenues in one quarter. Beat by $330 million, up by 13.3% year over year. United Health trading at $235.06 to close the week. Premiums up 13.2%. Services up 19.5%. Products up 9.3%. Investments up 34.2%. It's good to be in the medical insurance business in the United States.
Oh, it definitely is.
They're making money at United.
Those numbers don't lie.
Yeah,
No.
Every quarter. It's unbelievable. Johnson & Johnson, we've talked about Johnson & Johnson
We
earlier.
have.
Jumping the prices up there, right?
That's right. Yeah.
Bruvica's working a little too good, bro. We're going to have to bump those prices up. $2.06 EPS, beat the street by 5 cents. $20 and a little bit for billion for revs, beat by 630 million, up 12.6% year over year. They closed the week at 126.66. That's 3 sixes in a row to end that number. That might be a bad omen. J&J consumer spent, or the consumer group up 5.3%, with beauty being the big leader inside there, up 10.5%. Pharma up 19.4%, with the oncology unit up 45%. Medical devices up 7.5%. The only thing I don't like about big companies like this, and we're going to go over this with a couple of companies as we go through this. United Health actually is a good example of it a little bit. earlier. These giant companies, they like to lump things into 3 or 4 categories now. And you don't realize, like, pharma's up 19.4% for Johnson & Johnson. And you look, well, inside of pharma, oncology's up 45%. Well, how much does that skew that number up? So there's a bunch of categories inside pharma that aren't doing very well that skew that number down. So if you're looking at just this macro picture, you need to get into the minutia. If you're thinking about investing, you need to really look into these companies and look deeper into these segments so that you see what's doing well, because they do use these segments sometimes. Like we'll see with IBM later that they use cloud computing in a different segment with some other things, and the cloud props up a bunch of other things that aren't really the greatest.
Right.
So it muffles down how good cloud's doing unless you look at it individually, but it props up that whole segment because cloud lifts up a bunch of these company or these segments that aren't doing very well. The same thing with big companies like Johnson & Johnson or United Health. They break these down into 3, 4, 5 segments, but with multiple little divisions underneath those segments. So you need to get into the minutia to see what's really doing well and what isn't. That's just a good overlay number. Goldman, $6.95, beat by $1.28. 10.04 billion in revs, beat by 1.15 billion in revs.
That was a big beat.
Yeah, that beat by 10%. Yeah. So analysts, again,
are wrong.
Analysts, they made that number. They made that estimate. It was beat by 10%.
I can make numbers too.
It was beat by 10%. Yeah. So let's just keep in mind, whenever analysts say something that scares you, they make a ton of mistakes too.
Oh, for sure.
Ton of mistakes. That number at Goldman up 25% in revenue year over year. Goldman, $251.96 a share to close the week. Quarter one return on investment up 15.4%. That's the highest at Goldman in 5 years. So in Q1, Goldman's already doing 5-year best work, and we just came out of years that were ridiculous.
That's
right? Investment banking revenue up 5% year over year. Financial advisory revenue down 22%, as obviously people are not using their FAs near as much. I guess in the last couple of years, this could be a market you could do it yourself, and you could buy a low MER ETF and ride these indexes out and make 20%, right? So why would you use a financial advisor unless he's really, really good?
That's right.
You better have somebody as good as me out there working for you, because if you've got some guy just pushing papers around, you could push some papers around and make 20% in an up market. It's going to be in these future markets, the market today and the market in 2019, where you're going to need a good FA that knows exactly what they're doing, because you're going to have to pick winners again. Institutional client service revenue up 31%. Investing and lending, which is the big thing that we know Goldman's moving into, lending, net revenue up 43%. Operating expenses has grown, though, 21% year over year. It's costing Goldman a lot more to operate. Investment management net revenue up 18%, and FICC revenue up 23%. Goldman, that's a winner. Other than that, operating expenses up 21%. That's a lot because wages and everything went up at Goldman. Like,
for sure, yeah.
Everything else there is just astronomically crushing it. Like, if you want to look at a company that's just doing it all right, Goldman Sachs is doing it.
Yeah.
Lloyd Blankfein is doing just fine. We talked about this earlier. Yeah, everything's working out to his advantage. CSX, 78 cents EPS, beat by 12 cents, $2.88 billion in revs, beat by 50 million, 0.3% growth, very, very small growth. They closed the week at $60.04. IBM, here's another company. Too many segments. They break it down into trying to make it very easy for people to read. It's got 4 big overlay macro segments that go into, the rabbit hole of stuff where you need black magic to figure your way out of there. It's
the coder ring.
And it's just too convoluted. So like a company like this, good earnings, bad earnings, the company worries me because I can't get into all of the things that they do. They just do far too much. IBM, $2.45, beats by 6 cents, $19.8 billion in revenue, beat by 370 million. That number's up 5.1% year over year. They closed the week at 144.90. Cognitive Solutions, up 2%. Global Business Services, down 1%. Technical Services and Cloud, down 1%. Systems, up 4%. Global Financing, down 4%. Lots of single digits, lots of big segment overlay labels that doesn't really tell me anything of how that company's doing.
Nothing.
I'm not overly impressed. IBM, if you were ever to invest in it, is a company I would say rigorously dig into. They do far too much. They're General Electric. They're just one of those companies where unless you know it, buddy, you might lose. You better know it because they're in too much. Morgan Stanley, $1.45, beat by 20, $11.08 billion, beat by $720 million. And that number's up 13.8% year over year in revenues. Morgan Stanley closed the week 54.46. Investment banking up 100 million year over year. Sales and trading revenue up 900 million year over year. Fixed income revenue up 200 million year over year. Asset management revenue up 300 million year over year. Morgan Stanley growing along, again, not the best in the business, but in the pack, and the financials are strong. Things are going well. The corporate tax cuts definitely help the financials. The financial season for all the big six were phenomenal. The banks looked great. There's no complaints on my end whatsoever. There are winners and losers, though. Clearly, your J.P. Morgan Chase and your Goldman Sachs are still front runners.
Oh, for sure. Yeah.
And if you're going to pick a financial, I don't know what to tell you. I'm not sure that everybody's not a little high priced right now, but there definitely is a disparity between first place A and B and everybody that goes second to the bottom. Just saying. Abbott Labs, 59 cents EPS, beat the street by 7.39 billion, beat the street by 100 million. That number's up 16.7% year over year. Abbott Labs' medical device division up 14.6%, nutrition up 7%, pharmaceuticals up 9.9%, and diagnostics up 58.7%. Good growth. Abbott Labs, huge company, obviously not the parent anymore, but the spin-off of AbbVie Labs.
That's right.
Yeah, so there's all sorts of good growth on both sides as we expect AbbVie to have fantastic earnings as well. Abbott Labs closed the week $59.19. Canadian Pacific, $22 and said, whoa, $20. They wish they made EPS like that, buddy. They will make that in 2 years. $2.70 beat the street by 3 cents. 1.66 billion, missed by 10 million. That's our first miss. Remember when I talked about earnings?
Yeah.
Remember how I said it was good? Remember I said people say the market's bad?
Yeah.
That's our first miss. In Canada.
A
revenue number missed by 10. Still revs up 3.8% year over year. That's our only miss we got today. EPS and revs. That's our only miss. Canadian Pacific. Canadian Pacific closed the week, $175.24. CN Rail, actually, there's not going to be a strike, by the way. They've pushed the strike down the road or whatever, Canadian Pacific volume up 6% year over year despite extreme weather. Carloads increased 4%. Canadian Pacific said they would have been even busier had the weather not been so unfavorable. But they said still they had significant demand even they didn't foresee. Good sign.
Good.
Amex, American Express, $1.86, beat the street by 15 cents. $9.72 billion in revenues, beat by $580 million. That's up 11.6% year over year. Amex closed the week, $100.79. Card membership spending up 12%. Provisions, though, find their way up to $775 million with increases in write-offs and delinquency rate. Keep an eye on those things.
Yep.
You don't like to see that. Alcoa, are they making bank off these steel tariffs? Steel tariffs, aluminum tariffs. What did Alcoa tell us? They don't tell us anything. They don't tell us anything because they make steel and it's so simple. There was nothing. They gave us guidance.
Yeah.
And it's so simple. 77 cents, beat by 7, $3.09 billion, beat by 10 million, up 16.2% revenue year over year. So they're pushing it out.
They definitely are, yeah.
$60.01 was the share price at the close of the week. They raised their guidance. They see increases in alumina, which is the precursor to aluminum, and aluminum demand. And they see a growing shortage in the international marketplace. So they see growing demand and a shortage. And Alcoa is definitely going to be one of the go-tos inside the United States.
Oh, I foresee that,
because a lot of people are obviously going to turn their attention there rather than paying any type of tariff because it's going to basically make the price even anyways. Alcoa is probably going to see some picked up business and a backlog that continues to build. Novartis, $1.28, beat the street by 3 cents, $12.69 billion in revenue, beat the street by $120 million. That's up 10% year over year. Novartis closed the week 77.88. Innovative Medicines up 11.7%, Sandoz up 3.6%, and Alcon up 11.8%. That's Sandoz number. People were not impressed with that being up only 3.6%, as Novartis needs to get that unit in control and be making more money than it is right now, as that was expected to be really a revenue generator. Procter Gamble, with probably the worst earnings call of the week, $1 beat the street by 1 cent, $16.28 billion in revenues, beat by $60 million, up 4.3% year over year, $73.80 to close the week. Beauty up 5%, grooming down 3%, fabric and home care up 3%, baby, feminine, and family care down 3%. As they noted, very heavy competition in all markets that they're either in or trying to get into. We see Procter & Gamble buying the nutrition company from Merck, hopefully diversifying into some other segments, as they notice quite a bit of competition headwinds, pulling back a lot of their percentages here and making them look like not as much of a blue chip company as they are.
They
really are, right? They're looked at as more of a dividend payer than a growth company, but not when you see a lot of these negative numbers. You expect to see very consistent growth. Nothing too astronomical, but it might be time, like they're picking up this Merck, the vitamins and nutrition. This might be the best chance to actually branch off and really complete a nice, diversified, something that'll help buoy any kind of other issues with the company, right? Segment down, you have a segment that's up. Right now, obviously not diversified enough because P&G took a big hit this week as people were not impressed with this earnings call. Rogers, cell phone company up here in Canada, 90 cents a share. They made for EPS versus 64 cents a share last year. $3.63 billion in revenues, up 7.7%. 48.11 was the closing share price. They added 95,000 postpaid subs. Their postpaid churn was down 2 basis points to 1.08%. That's the best first quarter in 15 years for Rogers, as they're not losing subscribers. And that's what you want to do with your cell phone company. Wireless up 9%, cable up 1%, and media up 12% over at Rogers Communication. Why don't you lower my damn bill?
Yeah.
I went over my data again this month. I have 10 gigs of data. I went over by at least 3 gigs because I bought 2 extra, and then I still went over that. And it doesn't roll over till tomorrow. I need to learn how to manage my data better.
A little bit. I think you do.
I stream consistently in HD all day.
All day long.
All day. Just CNBC in HD. That's, on the road. Obviously.
13 gigs of data, CNBC.
Well, at least I know what I'm talking about.
Exactly, yeah.
Hook me up, Rogers. Come on. General Electric reported earnings, 16 cents a share. Beat by 4 cents, $28.66 billion in revenue. $1.14 billion is what they beat by. That number up by 6.6% year over year, $14.54 for General Electric. Much beleaguered General Electric. Company that's really, really trying to fight back. The market wants to let them fight back. This is one of the things I've decided as I've started to look at General Electric over the last 6 months. Let me take a drink here. I got to get a little drunk before I talk about GE. They don't want them to die.
No, they don't.
They want this to work. This is one of those American stalwarts. This needs to be fixed. They can't have General Electric go bankrupt. They can't have this company fail. The marketplace is not willing to let it fail. The marketplace is going to, I use the term buoy again, it's going to help a company like this through even average earnings because they can see the guys inside want this to be fixed. And I think the general public look at this company as being one of the bellwethers of the American economy, and they want this to work as well. They know GE is trying to turn it around. We've seen it last year. They cut corporate spending. They cut the planes. Guys at the high pay scales took no money, basically, right? Like, we're talking about no bonuses. GE is being very staunch about trying to fix this. They reduced costs by $805 million in this quarter. They said they're easily on pace for the $2 billion reduction for 2018. Power, oil and gas, and GE Capital are the underperformers in the sector. They said it's going to take a lot of work to get the power business back up and running. They say they're working on it. Aviation, healthcare, renewables, transportation, and corporate outperform the expectations. They say the aviation's doing really well with the engines. say everything's going well. They've got a lot of backlogs. Transportation, though, they're in the process of finalizing the sales pitch they're going to put out there to be selling that transportation division, even though it went well this quarter. General Electric trying to do everything to turn things around. I really think the marketplace is behind them. I see a lot of positivity in GE when you hear analysts talk that a company that's doing this bad you wouldn't hear, but it's just from generations of people knowing General Electric.
For sure, yeah.
That this company almost, people are behind it without even knowing. Like subconsciously the sentiment is behind the company to make it, even though when they talk about the company being in dire straits or somewhat a dire straits, but you can tell that it's like they want to help lift the company from dire straits or believe that the company will be lifted.
Right.
GE, while a company I'm not sold on right now, is definitely a company I look for in the future as this ship gets righted. If things move in the least of right directions, I think the market is going to pick it up. And the market is going to help push GE as GE cuts a lot of this dead weight and figures out how to streamline that company. They have no choice. John Flannery needs to figure this out. Honeywell, the last one, $1.95, beat the street by 4 cents, $10.39 billion in revenues, beat by $360 million, up 9.5% in revenue year over year, closed the week, 150.57. You closed the week. Marvelous, my friend. Absolutely marvelous. How was that?
That was excellent.
Was that excellent?
Yeah.
We brought the noise.
We did.
Raised the roof. I would have done the Running Man had I hips pertaining, but I just don't. I would have fallen on my face in celebration. No. But otherwise, podcast went swimmingly well. Went swell.
Smooth.
It was so smooth.
Yeah, so smooth.
Like it was coconut oil lotioned up. Oh, so smooth. It went in there like you wouldn't believe.
What a believe, huh? Yeah. Well, that wraps up another This Week on Wall Street.
Will I see you again next week?
No.
No?
No.
You're planning an excursion.
Going to the moon.
You're going to the moon.
Yeah.
What's on the moon?
Rocks.
Some
dust.
Really? I won't be here either.
No.
I wonder who's going to be standing in for us.
Oh.
I'm going to try getting pizza delivered to all the bridges around the city.
I'm definitely going to tune in and find out who's these.
I'm going to live stream all of it on Facebook Live. Yeah.
Nice.
Just going to be bridge hopping, ordering pizza. I don't think any of this is implementable in Canada, but I'm going to be forceful on the phone. I'll get those pizzas delivered.
You will.
I wonder who'll be here next week doing this for us.
Chimps, I believe.
Chimps. I thought you killed that guy. Isn't that what you said?
I did.
You said that last week.
I did. It turns out they were just tranquilizers, so he's okay.
He's okay.
He's okay, yeah.
Maybe I will get my good co-host. Maybe that pizza idea is off the books entirely. Well, until then, I'll see you or a chimp next week, and we'll see you guys next week. Thanks for tuning in to a podcast with a couple idiots talking about the stock market. Have yourselves an outstanding rest of your week.